So here we are. We are looking at Australian 2-year government bond yield, and as we can see in the top right corner, it's showing 4.82%. And this is a daily chart. And in blue line, this is the official Reserve Bank of Australia interest rates, or interest rates set by Reserve Bank of Australia. And as you can see, it's at 4.1. Now, this is a daily chart. If you look at it here, you may not see it quite well as when you change into a weekly or even to a monthly. All right. Even looking at it at the monthly level, all the way from the high interest rates in beginning of 1990s, when the interest rates were 17% officially, right? What you can possibly notice is that the 2-year interest rate leads the official decision made by the Reserve Bank of Australia. Here you can see it's falling and it's closely following that. Maybe it's best to see it in a weekly. Let's go back, scroll back to (1990s). All right, so 1990s, as you can see, this is a weekly. The rates, when they started moving down, the official rates even went ahead of them. But then they bottomed out, and as the rates turned, they followed that along. And look at that. So from then on, if the rates are not really doing anything, like here, 1995 July, going sideways, well, they weren't really doing much. And the rate started falling. This is a little bit ahead of itself, but see, it's following the rate sideways, not much action. Rates start to go up, they are following. Rates start to go down, they are following down. This is from year 2000, very clear from the year 2000. What's happening after? Chasing the rate down, chasing the rates up, sideways. Chasing the rates up, sideways. Sideways. Sort of step climbing it there. I don't know what was going on here, but look at this. The GFC rates are plummeting and the Reserve Bank is cutting rates in earnest. Then the rates flip and start going up. They were holding. They're going, is it really true? Have the rates turned? Oh, they've turned. Really, we have to go up. And they're following along, right? The rates in 2011 into 12 started falling. They're trying to catch up. Then there's a period of going sideways, catch up with the falling rates a little bit, then a little bit more, then sideways again. Quite a bit. This was unusual. They could have raised rates here, but they didn't. Maybe they've guessed what was going to happen. And look at that, look at that. So they went almost to zero. And then when the rates finally bottomed out and they're going up, they're chasing them up as hard as they can. The rates continue to go up. They had to raise again and again, and then sideways. Now they could have lowered the rates here and here, but they chose not to. But then the rates started to come down again, and then they saw the writing on the wall, and it went down, down, down. But then the rates flipped. And what's happening now? The rates are going up. And now, what do we have now? Well, we have the American war with Iran. well, I should say American and Israeli war with Iran. Um, and as we all know, uh, war of that scale uh, brings inflation. It brings inflation, this conflict brings inflation from two sides. One is from an engineered shortage of crude oil and gas, LNG, and as well as excessive spend on the weapons and military industrial complex. So the Americans are spending like crazy on the weapons and military, and on the other hand, we are getting economy getting destroyed by lack of oil, and oil is energy, and if you have no energy, the economy is not going to go anywhere. So what's happening? My goodness, the rates are going up, inflation is going to go up, and it's not really nothing to do with Australia as such, but it's mainly to do with crude oil not being available or being repriced for whatever reason, for whatever excuse. It's being repriced by a good chunk more. And as we all know, or if we don't know, we should know, that crude oil is the mother of all chemicals that leads into 45,000 different products. They make 45,000 different kind of products out of petroleum, out of crude oil. All the plastics, all the energy, jet fuel, etc., etc., all sorts of things. Everything comes from crude oil. If there was no crude oil, if there was no crude, the economy, there would be no economy. We would live in the dark ages. There would be no agriculture. There would be no food. So let's see what happens. Let's see how far the overlords will push this, uh, and how soon we will end up on the UBI. Aye. So before we go, the final overview of this situation from technical analysis point of view, what do we see? Well, over the last couple of years, what we clearly see is a bull flag. So if we use parallel channel here on TradingView, you can see what happens. Look at it. This is like a parallel channel, which really is like a bull flag, because you have a move from the bottom of 0.01%, was it? Something like that. The low, 0.014%. It went all the way to the high here is 4.54%. So basically, what you have here is a major move from a major low to a high, then a consolidation period, and now we have clearly broken out of the consolidation period because of all the inflationary pressures that were not contained, and because of the USA-Israeli war with Iran. So we have oil shortages or oil crisis, whether it's manufactured or natural, doesn't matter. We know that the money is being spent on the weapons by the billions, and we know that we are being squeezed on the oil side, making all the goods more expensive. So what do we have here that we can expect? Well, normally when you have a big breakout and a consolidation pattern here like a bull flag, you expect to repeat the same pattern. So let's project this pattern where will it go to? So here we go, from the low to the high, and then you move it and you put it here. And now all we need to do is lower this chart and see what's the target. Oh my goodness, 783% by, what's the target here? November 27. So it is quite a normal expectation. If the pattern repeats itself, we will be at official interest rates. Oh, sorry, not official interest rates, but two-year Australian government bonds yields should be around 7.8% by the end of November 2027. So a year and a half, 7.8%. But what will be the official interest rates from the Reserve Bank of Australia? Probably about 0.5% lower. So between 7.2 and 7.6, that would be a normal expectation. So yeah, that's what we can expect. That's a monthly view. So you can see where it is all going. I hope you enjoyed this overview of the Australian interest rates.